morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we're taking a look at an issue that is of growing importance to an increasing number of investors, and we're talking about the financial performance and dividends policy of Republic Financial Holdings Limited. Now, its financial year recently concluded to the end of September 2020. Investors will be wondering, how is their dividend policy going to affect two closely related investments, in particular the CLICO Investment Fund as well as the National Investment Fund series of bonds. So let's get right into it. And to be very clear on the relationship, the NIF, or National Investment Fund, owns just around 26% of the outstanding shares of Republic Financial Holdings Limited. And from this ownership or portion of ownership, these shares are used as collateral for NIF bonds, and it comprises roughly 60% or just over 60% of the NIF portfolio at present, as well as the dividends from the NIF, from the Republic Financial Holding shares, are used to pay NIF bond interest. Now, the CLICO Investment Fund also holds a fairly significant portion of Republic Bank shares. That's just around 24.6%. And again, the CIF uses the dividends from or received from its Republic Financial Holdings shareholding to pay a significant portion of its distributions to unit holders, as well as Republic Financial Holdings representing approximately 90% of that value of the underlying portfolio and net asset value of the CLICO Investment Fund. Now, just to give a wider context, there has been quite a significant decrease in dividends over the past comparable 10 months of 2020 versus 2019 across all sectors of the Trinidad and Tobago Stock Exchange on the first year in particular, with dividends on average falling just around 42%. And that's if, on a very simplified approach, you would have owned just a single share of every stock on the first year of the Trinidad and Tobago Stock Exchange. And with respect to the banking sector, we can see that dividends have declined for the 10 months of 2020 versus the 10 months of 2019, 17.3%. So if you held one stock of each stock company in the banking index or banking sector sub-index, you would have received around $6.40 in dividends in the first 10 months of 2019, whereas in the first 10 months of 2020, you would have received just around $5.28 in total. Now, specifically to Republic Financial or Republic, it has been a model of stability up until the fiscal 2020 year from a dividend perspective, and we can see that the interim dividend in that fuchsia pink was fairly stable at $1.25 per share over the past 4 years or so. And in the fiscal 2020, that dividend was slashed to 60 cents per share on account of declining earnings and uncertainty with respect to COVID. Now, the big question, of course, is what's going to happen to that final dividend now that the fiscal year has been concluded. And as we can see, that final dividend has been stable to increasing over the past 4 fiscal years from $3.10 to $3.25. And there is quite a significant question mark now, given that it accounts for over 70% of the overall Republic Bank dividends paid in any fiscal year of recent times. So that will have an impact, or has it already had an impact on CIF as well as NIF bond prices as well as expectations? Well, in the case of CIF, if we look at the traded price of CIF on this red line, we can see that there has been some significant volatility, particularly in 2020, where the price would have fallen to as low as $21.50 at the height of the COVID-19 uncertainty earlier in the earlier part of the year. It would have recovered to around $27 but has now settled at around $25. However, compared to the net asset value of the CLICO Investment Fund, that has consistently been around that $30 mark, and we can see some very nice uptrend in the CIF's net asset value, or NAV, and that has pushed the discount, the difference between what you can purchase the CIF at on the market as versus what it's worth in terms of its net asset value. It has pushed that discount as wide as 18.6%, which has been on the wider end of things in recent times. So certainly, from a market traded perspective, CIF seems to be under a little bit of price pressure. However, from a value perspective, it seems to be fairly stable or trending upward, in fact. And that could represent some medium-term value for investors willing to hold the course. With respect to NIF and its dividend income versus coupon income, well, we can see that in 2019, the portfolio of companies held by the NIF generated just around 300 million in dividends, and it paid out just around 224 million in dividends, so an approximate surplus in cash received of around 80 million. Now, comparing the first 10 months of 2019 to 2020, we can see that NIF would have received around 160 million in dividends versus our estimate of around 115 million for the first 10 months of 2020. And of course, much of that change would have been attributable in that bright green to that decrease in receipts of dividend income from RFHL. Now, is there anything to worry about in the short term for NIF? Well, in our view, we don't think that from a coupon payment basis, there is too much to worry about. In fact, NIF would have paid both of its coupons for 2020 already, both in February as well as August for all of its series. And from a repayment perspective, well, there's really nothing to be worried about in our view. The outstanding value of $4 billion in bonds it pales in comparison to the approximate value of the holdings of NIF of around $9.5 billion. So around 2.4 to 2.5 times more in value of the underlying portfolio versus the outstanding bonds of $4 billion or thereabouts. So for investors who have been concerned and who have been asking questions about NIF and CIF, just to wrap up, coupon payments should be fairly unaffected, at least for the next 12 months or so, based on cash flows, and with some normalization of dividend policy of RFHL, that risk should be mitigated even further, and principal repayment risk remains fairly minimal. For the CIF, well, it's natural that lower dividend payments from the public will mean lower dividends or distributions for CIF unit holders. However, with that difference in the net asset value and traded price widening, it could represent some better value for medium-term investors looking to hold this for with a longer term time horizon. That's it for this week's report. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com, where you can find the latest of all our research absolutely free. And we're also in today's business section of the Trinidad and Tobago Guardian. Have yourselves a wonderful investing week. This has been the Bourse Report.